Hi there, traders. This is Brad Gilbert with today's trading action. All right, now there's a fair bit of content to go through here. We've got the Swiss National Bank interest rate decision. Rate cut is factored in, and we've got the Bank of England no rate cut factored in. So we'll just explain a few things. But to start with, I like it when the news services just tell you what's going on, like the raw facts. Okay, the dollar is struggling for direction, and the euro is close to 1.5 month lows. That's all we need to know. Right, because that is exactly what's going on. Now, if I just focus on the daily charts here, right, and I'm going to cover the Swiss and the sterling as well. Now, you can see here the dollar index sort of is drifting sideways, and here's euro sort of down on that 1.5 month lows. But really, we're lacking the nail in the coffin, right? We're not getting it from the Fed or the US numbers just yet. The US numbers are weaker, but we just need a bit more continuation there to get it running. The one instrument that is moving, right, it's Swiss strength, right? And this is important because it's going to be like something to focus on as we go into the Swiss National Bank interest rate decision coming up later today. And it's a thing that's going on. Like there's Swiss strength across the board. It's like everyone's jumped into the safe haven just to camp their cash. You know, interest rates are 1.5%. So it is more of just a safe haven sort of trade, but there's a bit more to it. Now, dollar yen just cruising topside with the carry trade against the dollar. You've got dollar CAD, okay, pretty neutral and stabilized after the Bank of Canada minutes came out yesterday. And sterling, well, it's just sort of sitting in the middle of the range. Aussie is the one instrument you've got to be sort of circling on your pad. The central bank a couple of days ago signaled they will be keeping rates on hold for a longer period of time. And that's different to a lot of other central banks, right? So I would expect the Aussie to continue to rally against most instruments. The Kiwi, well, it does follow the Aussie closely, but it will lag in that direction. So that's the majors, right? And we're like, yeah, this is great. We do have the Bank of England, okay? So sterling and the Swiss National Bank in the frame today with their interest rate decisions. Now, let me just come across here and just give you a bit more detail about that, because when you do look at the interest rate probabilities, right, and the Swiss National Bank, if I just come to the data first, let me just get my pen across here. Okay, so if I just sort of scroll down a touch and we get into the key components here, Swiss National Bank, right, it's and then you got 2.5 or 1.5 hours later, you've got the Bank of England rate decision, right? So no change from the Bank of England expected. There is a small group that are considering that they may cut. So I don't think they will after the CPI numbers yesterday, whereas the poll for the Swiss National Bank to cut is at 67% factored in, right? And that leaves the door open for a trading opportunity, like a no-brainer. And what I'm talking about is, if we look at the Swiss National Bank, the probability of those guys cutting rates, right, it's 66.34%, right, for a 0.25%. That means 66% of the market obviously has factored that in. So if there's no rate cut, well, we're going to see a change in the value of the Swiss because they will buy Swiss, right? But this is the problem, right? When we look at the Swiss, right, and this is going back to January 2015, right, where the Swiss National Bank tried to peg Euro Swiss. It was a disaster, and it crushed. Like there was brokerage firms bankrupt instantly on this announcement because they all got caught on positions. Now, if you're looking at the Swiss here, right, and on an hourly perspective, it's just going down, right? The dollar's going down, Swiss strength, and it is the same on the daily charts. This is what's going on. So very hard to sort of trade those instruments with no sort of technical levels. We've got clear direction, but where do you get in, right? And that makes it a little bit trickier. And when there's no uniform level to get in, bankers across the board will balk at it. Some will go in with smaller positions, etc. But what we can do is, if I just clear that, okay, is really start to focus in on the Swiss crosses and just looking at the daily charts. Okay, now this is where you sort of look at it and you go, well, interest rates in Switzerland are 1.5%. They've factored in a cut. So you'd think there'd be Swiss weakness across the board, right? But a lot of these instruments the Swiss is rallying against everything, right? It's like even Euro Swiss is getting clubbered. Aussie Swiss, Kiwi Swiss, Sterling Swiss, and CAD Swiss, right? And the Canadian dollar is a little bit weaker, but Swiss is outperforming everything. Now, if they don't cut rates, well, the Swiss is going to continue to rally. And the Swiss National Bank have already been talking about this, saying, you know what, you better stay away from our currency because it's already too strong. So I don't think the Swiss National Bank can afford not to cut rates. In actual fact, I think they'll cut rates and they may signal that a further rate cut is needed. Now, the probability distribution here, you can sort of see going, we've got the interest rate decision today, then September, December, March. They're looking for cuts, right? And there's more cuts factored in. But the thing is with the Swiss, they've got to be careful as well because interest rates there are at 1.5%. They don't have much room to keep cutting to lower the value of the Swiss because all of a sudden they're at zero and they've got a conundrum because they can't really manipulate the markets with that, right? So it's a bit of a tricky one. When I'm looking at the crosses, just coming back to that, you're like, okay, so what makes sense here? Not a lot, right? If anything, you would be on a fundamental basis. The RBA has signaled we're on holding rates for a longer period of time than we actually thought. They're actually thinking about hiking rates, and the Swiss are cutting rates. Why is an Aussie Swiss through the roof, right? That's the sort of situation you look at and you go, you scratch your head and think, well, that doesn't make sense, right? Like the cut is factored in, all these things, like as much weakness as you can, but the Swiss is super strong. So to me, it could be an absolute convoluted opportunity. Sterling Swiss, for all those technical purists, you got a bit of the head and shoulders there, okay, which you would think now it's broken down through the head and shoulders. It would keep going down, but I just don't like the look of things. And this is maybe my history of watching that January 15, 2015. It's etched into my brain, where they made an absolute mess of Euro Swiss. It just is one of those situations where it's not an easy trade across the board. As I was saying at the start there, with this decision, if they don't cut rates, well, the Swiss is going to appreciate even further. And as I said, they have been talking about they don't want that, right? So I think they've got to cut and probably signal more cuts, right, to try and get the Swiss coming back. But this is like the Bank of Japan, right, trying to push dollar yen down. You're pushing against the fundamentals, and there's so much cash in the Swiss, right? And this could come back down to a lot of the cash going in, especially out of Europe, right? Because of this calamity with the French election coming up, geopolitical event. There's I think I read there was like 6 or 12 countries that have blown out their EU debt limits, and they need to get those back in line. There's a lot of problems in Europe, right? Underlying problems that we're sort of not aware of. So it makes the Swiss trade here very tricky, right? Now, let's just come back and focus in on the Bank of England, right? This does make a little bit more sense. Okay, so just looking at the Bank of England here, the hike 0.25%. Okay, well, I can't see that happening. The 1.4%, no change. 98.6%, right? So that is going to be the decision. If you look at the probability distribution of when they will be cutting rates, it's more later or factored in for later in the year. Now, I think they'll move sooner than that. I think September to me looks more likely, but the UK data is already turning, and it can turn very quickly. So what can we trade here on the pound, right? So we're looking at sterling. Once again, you come back in to look at sterling against the dollar. It's a tricky one because on the hourlies, right? If I just sort of shrink that chart up a bit, we can sort of see what's going on. It had a really good run, then it's sort of just dipped, and now it's sort of in the middle of nowhere, in sort of no man's land. And if you look at the daily chart, you can see exactly where it is. It's sort of mid-range. It doesn't know whether it's going up or down, and this is primarily because the Fed don't know what they're doing with interest rates. The Bank of England are sort of not doing anything with interest rates either. So we're just getting it sort of fluttering around the place. To me, the action is you need to come back to the crosses, and this is where you're going to see some logic, right? And I really think there's a good trade here. I sort of missed the top here yesterday or during the UK session. Sterling Aussie, right? So the Bank of England, they don't want to scare the market. They won't do anything today. It's going to come down to this statement. But once again, the Aussie RBA have talked about high rates for a longer period of time. It's just breaking down on the dailies here. I think getting short Sterling Aussie is a great trade. It just depends on what the Bank of England says in their statement and the press conference. They're not going to be talking about hiking, right? So it's very important we look at that. And the other thing about this interest rate decision from or the data coming out today from the Bank of England will be the vote count, right? And there's a possibility that I think we will see it, that the vote cut will go to 3 here, okay? And that will be a slightly bearish outcome for sterling, right? So it just means where one more of their voters is going towards a cut, and it sort of leads us towards, potentially earlier cut than later, right? So that's the other sort of side of it. So just coming back to the charts here for sterling, so sterling Aussie, I like this thing down. I just like it. It's more of a medium to long-term trade. Hopefully, if we got some comments out of the Bank of England saying, we're going to be on hold for a little bit longer, we might see sterling Aussie pop a bit up towards 91, the figure. I think that's a great level to be looking to get short sterling Aussie, and something that you need to sort of keep an eye on. Kiwi Aussie, well, I mean sterling Kiwi, it's sort of set up for a move down. If sterling Aussie goes, maybe we jump on sterling Kiwi. I always think trading Kiwi, there's not as much liquidity and it can be a little bit more convoluted than the Aussie sterling Aussie. Now, euro sterling, okay, it's already sort of cracked the downside here around 84.5. It's stalled here at the moment. I think the next move on euro sterling will depend on the actual what they say in their statement and press conference. Don't forget, I just find it hard to get short euro sterling, right? When, there's this sort of a bit of uncertainty around when the Bank of England's going to go. Like the move in euro sterling is mainly factored around the geopolitical situation with the French election coming up and the uncertainties in Europe. Makes sense but it sort of looks like it's already sort of fully baked in. Sterling CAD, well, the Canadian dollar, it's weak. An interest rate cut has been factored in on dollar CAD. So sterling CAD, what are we going to do with sterling today? Okay, no change of rates. Once again, it will come down to what they say, but I can't see too much happening there. Sterling Swiss, well, the Swiss is all over this, right? As I said, the Swiss strength across the board dominating. We're going to see, this is the funny part, right? And funny in the sense that it doesn't make sense. The Swiss will be cutting rates. The UK won't be. You'd think that would go up, but I can't see it happening at this point. There's just too much things happening behind the scene in Europe. A lot of money going into Swiss, like a bit of a safe haven sort of play. And you got Swiss sterling in there, sort of just cruising topside. So out of these, I'm looking across the board here and thinking, well, what can I trade? Well, on the release, depending if they sort of come back and the vote cut changes to 3 from 2, you'll see a little bit of sterling weakness, but that's, it's by the by, right? We already know the UK data is weak. I think looking for a technical trade here on sterling Aussie is the way to go out of all these pairs. You back up, maybe sterling Kiwi. That makes sense. If anything, I'm looking for a higher level to get in. And that's just because we can sort of cherry pick the situation. It hasn't moved far down through the daily trend line there yet, but getting short back towards 91, you feel a bit more, you feel better because it's obviously at a better level. But we will see what's going on as we go forward. And that's the situation, right? When there is a potential rate cut from a central bank, it is a tradable event, right? But I'm sort of trying to tell you here, just be aware of the Swiss. They are very dodgy. And you know what? Going back to that January 2015, when they pulled the Euro Swiss peg at 120 the figure, the Swiss moved about 6 hours before, right? You're trying to tell me that the Swiss, I mean, all that, they used to call it the Swiss mafia, the central bank hadn't told all the wealthy Swiss? Sure as hell they had, right? Because the move happened and then they made the announcement and it just collapsed, right? Very easy way to make millions and millions of dollars, right? So don't think these guys play by the rules. They generally screw it up. So it makes it a little bit tricky. Now, outside of that, we come into the North America session. You've got the weekly jobless claims. You've got some housing starts. Just keep an eye on these numbers, right? And the Philly Fed Business Index just down here. We have been starved of oxygen as far as US numbers. The market will be sort of having a look at the jobless claims and, well, the housing starts, just having a look under the hood of what's happening in the US economy. That's something to sort of look at there. Good sort of second, third tier numbers that may come into play. But really, the day belongs to the Swiss and the Bank of England. It's going to be interesting to see how these things play out. Like, I don't expect a lot out of the Bank of England, and I'll be surprised with whatever happens on the Swiss, right? These lunatics could say anything. So that's a bit of coverage. You've got the interest rate probabilities there. See what's going on overall. The FX polls here, I was looking at dollar Swiss, the polls of where this thing is going. And it's quite interesting, right? Because we are at 88.40. The 1 month poll is 91 the figure, 3 month 92, 6 month 92, and then back to 91. So the market's expecting this current strength in the Swiss to dissipate over the next month. I just can't see it just at the moment. We need things maybe after the French election. If everything's sort of calm, then we might see everyone sort of get out of that Swiss trade. But at the moment, it's the sort of flavor of the month. And it's not a carry trade, obviously, because the Swiss rates are 1.5. It's you're losing money on the interest rate carry there, but they just want to park their cash somewhere. Just looking at the global markets, as we go into the day here, right, a bit of a mixed reaction here on the US futures, and you're going to see that sort of carried across the board. It is evident in the majors. I mean, these ranges have just been reset after the end of the North American day, but you can sort of see a little bit what's going on. And that's pretty much it, right? There's a little bit lower levels here in the US treasuries, but like everything's sort of on hold. And as that sort of commentary said at the start, the US dollar is on hold at the moment. Sort of we're waiting for the fresh news and information here around what's going on with some of these central banks, what's going on with the Fed. Let's get some more data in play. That'll make things move, right? So good luck if you're trading the Swiss National Bank or the Bank of England. Just be careful. The actual move may come from what the central bank is saying in their statement or their press conference, right? And that can be a little bit convoluted. So bit of risk involved, but see how you make it play out. To me, Sterling Aussie is the trade. Definitely looking to get short on rallies at this point. All right, guys, I know that's a little bit long, but this is a great lesson for those traders who aren't aware of how the central banks work and how everything rolls out. It's going to be super interesting. This is, for traders with a lot of experience, this is the sport. This is like game time. It's like, okay, let's just see what goes on here. It's exciting. All right, guys, have a good day. All the best. Cheerio.